Good afternoon, everyone. This is Katie Novotny calling in from Premier Marketing. As always, I appreciate you taking the time to join us today. Today, we are actually going to take a different point of view of a lot of our webinars. We're going to talk about underwriting. We have today Chris Clement from Mutual of Omaha, who is the new underwriting manager, along with Maria Lara Ravis from this sales team that is going to kind of shed some insight of what we're seeing over at Mutual, where they're seeing opportunities, and maybe why we need to look at them if you are not at this point, or continue to, and see where we can possibly have a better 2022. So with that, Maria, you want to take it away?
Sure thing. Hi, good afternoon. Thank you very much for your introduction, Katie. Good afternoon, everyone. I want to first of all thank you for taking time from your busy day to listen to Chris and I talk about the Mutual Long-Term Care product. As Katie mentioned, my name is Maria Lara Rivas. I'm an account executive here, and I work with Amanda Blackburn, who's one of 3 long-term care sales directors. I started with the company back when I was in high school, and it's been part of my life for over 30 years. And so you can see that I really believe in this company and its products. I purchased my long-term care plan more than 10 years ago, and I know that there's going to be a need for it in the future for me, hopefully a long time from now. But I saw that need when my parents needed a care. Coming from a large family, we depended a lot on the grandkids, the children, um, brothers and sisters to care for my family. I come from a much smaller family with 2 boys. I don't expect them to care for me, so I really saw the need for long-term care. We realize as carriers that you as a producer have the most difficult job, and that is staying up to date on all the products available today. If you're trying to solve for a long-term care plan or event, we believe the traditional long-term care is the most comprehensive coverage for that premium being spent. I'm going to talk a little bit about our company and the long-term care advantages. It is carriers in the business like Mutual and partners like Premier Marketing and all of you connecting with consumers that bring awareness to the value of having a long-term care plan in place. As a carrier in this business, our position is to ensure risk. We are unique in that we are a mutual company. Being a mutual company positions us to focus solely on the long-term care needs of our consumers and customers, not for the short-term demands of the stock market. We have remained strong, stable, and secure for over 113 years. Mutual is positioned to weather the storm. We endured the 1918 Spanish flu, the Great Depression, 2 world wars, the 2008 financial crisis, and now the current pandemic. Through it all, we have stood strong and continue to serve our customers. I hope this message brings you the certainty and confidence in our position as a company. There has really never been a better time than now for you to be discussing long-term care with consumers. Okay, so I'm going to just kind of discuss a little bit about our plans. So we have our custom secure product and we have a custom and the secure long-term care product. Both of these policies under the mutual care portfolio provide coverage for home health care, assisted living, and nursing home. Aside from recognizing that some coverage is always better than no coverage, consumers need to understand that the younger and healthier they are, that's when they're going to be able to purchase a traditional long-term care policy at a price they can afford. Our product is available from ages 30 through 79, with the exception in New York, with that age caps out at age 75. Our policy offers the consumer different inflation protection options. Everything from no inflation up to a maximum of 5% inflation. And instead of having a lifetime inflation, you can cap it at 10 years, 15 years, or even 20 years. That's going to cut your premium down substantially. If you selected the buy-up option, which you'll find under our custom product, your client will have the ability on an annual basis at the policy anniversary date to increase or decrease their inflation protection without having to go through any underwriting. Just think, you could have a client take out a policy in their 50s, determine they either need more coverage or maybe they have the budget to spend more at that time and they're looking at increasing their coverage. With the buy-up option, they have the ability to increase the inflation protection without having to go back through underwriting. I think everyone would agree with me that for those consumers that purchase a policy, most often will stick it in the drawer and forget about it, and then several years later take it out and wonder what benefits they have. Well, Mutual of Omaha is unique in that case. We mail out our policyholders, the ones who have an inflation, an annual letter, letting them know that their policy, what their policy benefits have grown to with their inflation protection that they've added. We also have something called a cash benefit. So our cash benefit is a built-in feature. It offers first day cash benefit coverage. That's 25% of home health care. There's no elimination period. It allows the policy to work exactly how a consumer would expect it to work come claim time. So there's no waiting period to receive benefits if you use the cash benefit first. If that consumer or that customer, if their care progresses and they need to move now to something where they can get the full monthly benefit, then they can switch to the reimbursement side of the policy. This is when their elimination period has to be satisfied. In addition, we also have a calendar day elimination period versus service day elimination period. Basically, what this is going to do, it's going to allow you to be able to meet your elimination quicker. Our maximum benefit is 15. Excuse me. Our monthly benefits, you can choose anywhere from 1,500 to a maximum of 10,000. So you see this value versus having a daily benefit that provides reimbursement benefits sooner and allows a greater flexibility to maximize policy benefits. Another great thing about our product is there is no cap on premium allowances. Basically, we have allowances here that offer you a discount if two partners are applying for a policy. We also have other allowances that Katie, when you work with Premier Senior Marketing, they'll be able to let you know the allowances that we have available to you. Another allowance I want to mention here is if they have a preferred rating. So if that customer comes back that has great health, height and weight is good, they could also get a preferred rate allowance. The recent pandemic created a spotlight for consumers to see the importance of allowing someone to remain in their home as long as possible. Our policy offers several stay-at-home benefits to help with this. Everything from caregiving training, durable medical equipment, home modification, and medical alert systems, all of which could be available up to the maximum monthly benefit. I'm going to talk a little bit about some of the features here. What you'll see in front of you is a male 50 and a female 50, both paying their policies for 30 years. So basically until they reach 80. The amount of premium they would have paid in as a male, he'll pay $38,373, and the female would have paid $63,583. We can estimate the cost of care, assuming a 3% inflation, to be around $146,551 for the male, and the female, $146,000. Well, basically the same amount if we're looking at assumed 3% inflation. But if you look here, I'm going to bring down my screen a little bit here. You can see here that the policy benefit with the 3% year, the 3 years, 3% inflation would have grown to $262,141. These numbers illustrate the value of a long-term care policy. This tells a story your clients need to hear and see for themselves. The Mutual of Omaha software gives you this option to choose a break-even analysis. This page illustrates the value with the numbers. So you'll be able to check this out once you get appointed with Premier, and you can find that software on our Sales Professional Access, which is our agent website. Okay. What I also like to show you here is some of the advantages that we have, or flexibility of we have in having an inflation lifetime, or dropping your inflation to a term period. So the next couple of slides that I'm going to talk about are that. So the first slide here illustrates a 3% compound inflation versus a 2% compound lifetime with a 20-year cap. As you can see, with mutual, the premium substantially drops from 1321, and then it drops down to 8. I apologize here. I'm looking here at my screen, to 835. And then from the female, 2165 to 1,264. When you cap that, when you choose that cap option, so instead of selecting a lifetime inflation, you can cap it at 20 years, and you can also drop the inflation. Doing this will put you way ahead with our competitors. Our competition does not offer the capped options as the opportunity to reduce the premium should it make sense for your client. I'm going to return back to this slide here. This will show you if you have a client who says, basically, I'm looking at return of premium with my long-term care policy. Our competition will be, if you're looking here, we show NGL. So with our 3% compound lifetime with return of premium at death, you see here, realizing if you adding a return of premium can increase the premium. I wanted to illustrate this by showing that. So if you look here, same individuals, both age 50, 3% compound lifetime with return of premium at death. For the male, 1843. And if you look at the 2% with 20-year inflation, you can tell here how much that lowers down to, allow me just a second here, 1,164. Female, 272.32 with the return of premium added as well, but this time reducing it to 2% inflation for 20 years. That drops it down to 1,596. As you can see here, our competitors won't offer that reduced term period, and that will put you ahead of the competition. So I hope you look at some of these features that our product has, and then consider writing Mutual of Omaha. I'll go through these slides. With that being said, I'd like to pass this over to Chris to go over some of our underwriting guidelines. Chris.
Well, thank you, Maria. So my name is Chris Clement. I am the underwriting manager, so all the underwriters report to me. Some of my background, just real briefly, I've been working in long-term care with two different companies. First, I worked for a company called Unum for a number of years, and I started underwriting back in 1999. I came over to Mutual of Omaha in 2017, so Maria has me beat by just a handful of years at Mutual of Omaha. And then I became the manager of this team in the new year. So in January is when I officially became manager of the underwriting team. So I eat, live, drink long-term care, have for a number of years now, and my team is sort of the same. I think that the average tenure of our underwriters is somewhere around 25 years in the business. So we have a very seasoned team. We do look at things perhaps a little differently than some other folks do in the marketplace. So basically, when it comes to underwriting long-term care, we look at each individual holistically. So we look at everything around their history, not just their medical history. Certainly we put an emphasis on their medical history, but we look at other things as well. We want to see their daily activities. And by that I'm talking about, are these people that go out and do things like go out and play golf, or are they physical? Do they go jogging? Do they just, there's been that focus on 10,000 steps a day. Are these pieces that these individuals do? Obviously, the more that they do of these sorts of things, the better risk they are probably. certainly would impact their medical history in a positive way. Other things that we look at, are they working? Do they continue to work? You know, folks that continue to work certainly are probably in a place where they are not ADL dependent at this juncture. We like to see that individuals work. It tells us that they get up each day with a purpose, and we feel that that is important. Obviously, we do offer coverage to retirees as well. Personally, I'm kind of looking forward to that piece as well. Another important piece of underwriting is marriage. You know, we do see that folks, when they have a significant other in the house, from a claims perspective, it's favorable. So all of these things sort of create that insurability profile and allow for us to make an educated decision on whether to offer coverage or not, and if we do offer coverage, at the appropriate rate. Our team, based on our seasoning, we're looking to make the best possible offer up front. You know, there's always the ability to appeal if someone's been denied or postponed. But at the end of the day, we feel that we make our best offer up front, regardless of what is quoted, and we'll talk about that a little bit more on a subsequent slide. We will make a decision based on the information that we have, regardless of what is quoted. So again, we're coming in with our best offer as soon as we can. Next slide, please. All right, so here we have our various ratings. Although not captured on here, we really have 6 possible outcomes when we have an application submitted. So we look at things based off of, we sort of work off that select rating right in the middle, and that's our standard rate. As the risk increases, we have the possibility of offering ratings. We have the class 1, the class 2, which, as you can see, is a 25 or 50% rating in terms of premium. And then, of course, we have that 15% allowance, that preferred health discount that's applied at the underwriter's discretion. And we try to offer that as whenever possible. We certainly, again, we're trying to put business on the books. We know that selling this product, it is a little more expensive than some of the other products out there. Long-term care in and of itself is certainly a little more expensive than a life policy or something along those lines. It is an investment. It's a lifelong investment, and we want to be able to provide that best possible rate at time of underwriting. My underwriting team isn't looking to decline business. All of our underwriters are sort of that sales mindset. We're looking to do what we can to put business on the books. By putting business on the books, we can do what our company, what Mutual of Omaha is really in the business of doing, and that's paying claims. If we didn't pay claims, we wouldn't be in the long-term care business. Frankly, we wouldn't be in any sort of insurance business. That's our job at the end of the day as an organization, to be there when folks need us most. Next slide, please. All right, so some of the things that we look at when an application comes in the door, these are basically what we talk about in terms of requirements. So what we order right off the bat on every single application that comes in the door, we'll do an MIB check, and we do a pharmaceutical check. If the medical history is concerning on the application, we will potentially order medical records. When you hit the age of 60, if the applicant is 60 or older, we would automatically order medical records regardless of their medical history. So even if they are of that pristine health, we're still going to order medical records, 60 and older. All of our applicants undergo a personal health interview, and that's done over the phone, unless they are 65 or older, in which case we would order a face-to-face assessment. And the face-to-face assessment is when we send the nurse over to the individual's home and they do that interview there. A part of that, of course, is a cognitive screening. They take some vitals. There's no blood work, nothing along those lines, but it's essentially an interview. Not unlike the phone history interview, it's just in person. And there's the chance for the nurse, all our assessors are nurses, and allows for them to evaluate the individual on a personal basis. We find that this is really important these days as more and more business is done via webinars and over the internet or over the phone as opposed to person in person. Certainly we've seen an uptick in that because of COVID as well. The pandemic has certainly impacted that, but we do we do feel that these personal interviews, especially for this older group of folks, 65 to 79 years old, provided by a nurse, provides us a lot of value. Another piece that, if we could go back one slide, I just want to touch on one little additional piece. Thanks, Maria. Is that when the individual is 60 to 64, they will have a cognitive screening during the phone history interview. So it'll be the phone history interview. There'll also be a cognitive screening due to age. And then we also do a cognitive screening via the phone on individuals who are under the age of 60 for cause. So pieces that would result, or causes, if you will, that would result in a cognitive screening would be things like a recent head injury or psychiatric history, a family history of dementia. Those would all trigger the individual during their health interview to have to undergo a health or the cognitive screening. Next slide, please. So one of the things around the personal health interview, and really this is really sort of basic stuff. It gets a little more intensive, and what I really want to focus on is when there is going to be a cognitive screening. But for all of these things, you know, there is a brochure that goes out, talks about the next steps, and that's certainly available to you. You want to have your client set aside an appropriate amount of time. I know that's not listed on here as a bullet point, but I think that it's really one of the most important things out there. You don't want your client to rush. You want them to be relaxed, as much as relaxed as you possibly can be. You want them to set aside enough time. You want them free of distractions. Perhaps have that medical information on hand. If you have somebody that perhaps has an extensive medical history, maybe they have a listing of their provider, especially if they have a specialist or two, along with a listing of their medications. During the cognitive piece, you know, if someone is going to have that cognitive screening done via the phone history interview or the face-to-face assessment, we want to make sure that they're in their best possible state of mind prior to undergoing these sorts of tests. And by that, I mean, if an individual, for example, had some sort of family emergency or was rushed or something that prohibits them or stops them from being at their best and fully relaxed, have them postpone the test. You know, have them reach out and say, you know what, I can't do this today, let's reschedule. We don't want them distracted at all. I recently ran across a scenario where a lady, unfortunately, her husband was in a car accident, and she was in a place where she was more focused on that than she was during the face-to-face assessment. And, you know, in a situation like that, we want her at her best. We want her to pass that screening. Obviously, she was thinking about something that was a little more important to her, deservedly so, and she didn't do her best. And unfortunately, in situations like that, we have to go with the test score. So we want them, or if they're in a scenario or situation where they can't be at their best, reschedule. I can't emphasize that enough. The face-to-face assessment, when the nurse obviously goes out and interviews the individual, it needs to be at the applicant's home where he or she resides. Next slide, please. All right, so some common declines, things that where you guys can really partner with us and help us out. You know, like anything else, we want to be able to put business on the books, but there obviously are scenarios and situations where we can't offer coverage. We have criteria just like other carriers do and other products have. So one of the things that's on basically every long-term care application that I can think of is that question around, have you ever been declined before? And we want your clients to be able to answer that question truthfully. And so by doing that, here are a couple issues that develop on a regular basis that field underwriting can sort of help. And by that, I mean, based on our criteria, based on the information that you can obtain from your applicant, you can make a determination if we are the right carrier for your client or not. So we don't want to decline anybody. We want to be able to put them in a position where if we're not the carrier for them, perhaps there's someone else out there that can offer them coverage. If there's a decline on the record, they probably can't. So a field decline is not a decline. from our perspective. We're not sending out a decline letter. They're not on our system as being previously declined. We haven't reported anything to MIB on this individual. So field underwriting can be very important. And some of the things that we run across on a regular basis that end up being a decline on the application are things like an active power of attorney. If someone has their power of attorney active, I'm not talking about having one on hand in case of emergency. I'm talking about where the power of attorney is actually active and in use, we do not offer coverage. If an individual has multiple family members, direct family members, so I'm talking about siblings and parents, not grandparents, not aunts and uncles, with a family history of dementia, if you have 2 or more, we're not going to offer coverage. Here we have right here, if there's a prior decline, you probably don't want to submit the application. But I will say that as the manager of the underwriting team, feel free to reach out to me if with the particulars on a case like this. If we can, we certainly realize that our criteria is different than other carriers, and there may be opportunities where we could offer coverage where the other carrier couldn't. So an example of that would be if the individual just recently had a knee replacement surgery. Our wait for a knee replacement surgery could be different from that of another carrier. I know of one carrier out there, they require 2-year stability period post a knee replacement surgery, whereas we'll look at that in a significantly shorter period of time. In situations like that, if we have the details around that prior decline, maybe it's something that we can offer coverage. So I would certainly invite you to have a conversation with one of our underwriters around that to see if it's a scenario where we could consider that person for coverage or not. We'll talk about the contact piece in a future slide. We run across this a lot, sleep apnea that's untreated. So we do require that sleep apnea be treated unless the individual truly has mild sleep apnea. And this mild sleep apnea would be determined by the sleep study. And the specific piece that we're looking for there is the apnea events per hour. It's otherwise known as an AHI. That particular reading must be 14.9 or less in order for us to consider the individual if they're not being treated. We commonly run across scenarios where somebody has sleep apnea, they've been prescribed a CPAP machine, and unfortunately, they're not compliant with it for whatever reason. They just can't get used to it. It's bothersome, and they're not using it the way that they should use it. So that's an important thing. We need to see compliance with any sort of sleep apnea therapy. We do need to see that individuals have been to a doctor within the past 24 months. If the individual is 60 or older, we require that they've had a full physical exam along with lab work in order for us to consider them for coverage. If the individual's under the age of 60, we don't require a full CPE like we do for those above, but we do require that they've seen a doctor within the past 24 months. If their history is otherwise benign and perhaps they felt that they didn't have a need to see a doctor for any sort of reason in the past 24 months, we may decide that we're willing to offer a paramedical exam at Mutual of Omaha's expense. Probably the easiest thing to check on an application is somebody's build, height, and weight history. We don't have the same sort of degree of abilities to rate up for height and weight like life, where they can go table 27. I'm being facetious there, but certainly there's a little more latitude with life than there is with long-term care. But we do have a height and weight charts in our underwriting guide, and we don't have the ability to deviate from it. So if the individual is 1 pound over, unfortunately, we would decline. And if the individual by the same token is 1 pound under, we would not be able to offer that person coverage until their height and weight has been within our insurable limits for 12 consecutive months. If you see that the individual lists on their application their height and weight outside of our insurable limits, I would recommend you do not submit the application, because we have no latitude there whatsoever. We have a little bit of play of the various height and weights based on a rating basis. So we have a preferred range, a select range, and a class 1 range. We have some play between the various ratings for height and weight, but on the top end and the bottom end, we have no play whatsoever. Physical therapy is a common reason for a decline with us, and really what we're looking for are those folks that are currently in the middle of physical therapy. For kind of the concerning ones are individuals that have a back history. And I'm not talking about the strain sprain, I'm talking about actual mechanical issues. So think about your spine, your low back pain related to some disc disease. We would need to see that the individual has completed physical therapy and been stable for 6 months prior to consideration. On the flip side, if somebody perhaps had a little twinge and a little rotator cuff issue and otherwise they're doing fine, we would probably be willing to look at that once physical therapy has been completed. We wouldn't require that same sort of weight. The back issues, when they're mechanical in nature, can be very significant. Now, one thing that we're running across more and more now is that individuals will oftentimes, and I think COVID has probably had a big sort of uptick in this, or resulted in a large uptick in this, is that people more and more now are requesting and receiving physical therapy referrals just to get in shape. There was a lot of situations where a lot of the gyms were closed. They weren't able to see their trainers. Doing exercises via Zoom just wasn't doing it for them. And so what we see more and more now is that individuals go to their doctor and say, you know what, I'm getting ready to go out and play golf in the spring like I always do. I do it every single year, but my core isn't where it needs to be. And the doctor will prescribe some physical therapy so that the individual can improve their core. We see this on a fairly regular basis now. As long as it's documented in medical records, that way we're going to offer that person coverage, even if they're currently in physical therapy. It's for their sort of overall wellness, as opposed to treating a specific issue due to some sort of injury or disease process. Finally, medications. So in our underwriting guide, we do have a list of medications in there that are uninsurable with us. They do represent particular conditions that are very concerning for us. So, for example, Zyprexa is an antipsychotic medication that's used for a number of significant psychiatric issues, everything from difficult to control bipolar to schizophrenia. Those would be issues that we would decline for. Next slide, please. All right, so tips for higher placement. Again, talking about those declines, reaching out to our underwriting team to see if it's a case that we would consider, will certainly allow for us or allow for that individual the potential to offer coverage. And pre-screening cases, of course, will also allow us to avoid being able to put that, having that yes response to a prior decline. And that's, nobody wants that on the record, so pre-screening is key, I think. If on medication, provide the types of medication, dosage, and how long they've been taking the medication, and other important details. By this, for example, you could have somebody that lists metformin. And so as an underwriter, the underwriter means I can jump to the conclusion that perhaps this person has diabetes because they're on metformin. But more and more, we're seeing that there are medications like this that can be used for a number of different things now. So while we're not super big fans of folks using medications for off-label use, more and more as off-label use becomes prevalent and more common, and there's medical data that supports that these medications work, it becomes label use as well. So metformin isn't strictly a diabetes medication anymore. We see it used for folks with PCOS, polycystic ovarian syndrome. We see it used sometimes for weight loss. So not providing more than just the medication, but providing the sort of the Next slide. All right, so some of the tools that we have our producer guide, or our products guide, which sort of goes through a lot of the scenarios and situations and product features, some of which Maria covered. And then we have the underwriting guide, which really has a snapshot of our criteria. It's not all encompassing. I don't know if we can realistically have that 700-page book and send it out to everybody. And I'm only being slightly facetious there. Our books are pretty big, but it is a nice little guide. It's about, I want to say there's probably 60 pages, 70 pages in it. And it allows for sort of different underwriting scenarios, and it lists the various conditions, the more common conditions that are out there. It also has our height weight chart in there, and it has our uninsurable condition list and uninsurable medication list. Next slide, please. All right, we have some condition-related marketing materials, and you can probably get these through Premier, but we also, we come out with these on a quarterly basis. Right now we have 4, I think 3 from last year. We've done 1 so far this year, and we're gonna be doing another one here pretty quick. The most recent one is the breast and prostate cancer one. Prior to here, we have osteoporosis and sleep apnea, and they just kind of go through some underwriting tips, kind of put you in the place of an underwriter and allow for you to sort of kind of see what we're looking for when we're underwriting these specific conditions. And of course, we have a timely one with COVID. Certainly the COVID one is a little more flexible in that, by that I mean, as we get more and more data around COVID and sort of the long-term effects of COVID, certainly all of our criteria, but certainly COVID in particular, is subject to change. As the data comes in more and more, we're just finding out more and more different things about how it impacts individuals, the efficacy of vaccinations, and the long-term effects of COVID with someone who's vaccinated versus not vaccinated. It's really, some of that stuff can be eye-opening. The most recent one we have is the breast and prostate cancer one, and it has some basic tips that can really be applied across the board for different types of cancer as well, while focusing on prostate and breast cancer, because they are the most common types of cancer or internal cancers. It's certainly a lot of the things that we look for these types of cancers are things that we would look for in other types of cancer as well, be it liver, kidney, so on and so forth. Next slide, please. All right, the application review process, kind of a key piece is making sure that you have all your licensing and contracting up to date prior to taking that application. What will happen is if any licensing or contracting is out of place and hasn't been completed prior to that application, we'll unfortunately have to reject that application, and a new application would have to be solicited once that licensing and contracting piece has been finalized. Let's see. The application. Go ahead. You're about to say something.
I was going to mention the partnership training guide.
Sure.
I just want to let everyone know that we do have an updated version of that. It is on our Sales Professional Access, our agent website. The partnership training guide will tell you what each state requires for training and the hours for training for long-term care. So that's one important feature that you must make sure that you have completed before an application is signed, is make sure that if that state requires that you have your 8-hour continuing education training for that state, then we have to have that information here in our licensing contracting to make sure you're current with that, and otherwise the application will have to be declined until that certification is completed, and then the application signed after that.
Thanks, Maria. She knows a lot more about that sort of stuff than I do. So it's fantastic that we're able to do this together. I think that, from an underwriting perspective, we really, as an underwriter, I don't delve into that information a lot. Basically, the underwriting team, if there's going to be a rejection due to licensing and contracting, the underwriting team doesn't have any say in it. I don't have any say in it as the manager of the underwriting team. If somebody were to say, can we do something here? I can't do anything. This one is totally out of my hands.
And you want me to talk a little bit about the application submission?
Sure, absolutely.
Sure. Okay, so as the way we have it with Premier is once you have an application submitted, you're going to submit that and more than likely to Premier, especially if it's an e-application. And Premier has the ability to scrub the application. So they'll review it, scrub it. If they see everything is good, then they'll go ahead and submit it to Mutual of Omaha. At that point, Mutual of Omaha will receive it. I'll go through the case manager. They'll review it to make sure that everything is good to go. Then you'll be getting updates from your case manager and also updates from our website. One important thing you should remember is there is a commission code. It also can be referred to as a Bob code. That for Premier Marketing is 5D as in David. So on the producer page of your application, you'll see two boxes. In these boxes, you should fill in the 5D. That'll tell our people here at Mutual of Omaha that application's upline will be Premier Marketing. On the e-application, you'll have that as a selection too. So once you're appointed, when you click on the drop down, you'll see 5D, and that's what you'll choose for as your commission code. So that's, if you forget it, it's not going to it shouldn't be a big deal as long as someone catches it that you're appointed under Premier Senior Marketing. But it is always very helpful that you do enter that information on the application. Katie, anything else you'd like me to mention that you feel it's important?
No, I think that this is great. One thing I do want to point out is we get this question a lot is regarding the e-app. We still do have the opportunity to write paper applications for any of you that are interested in that way. So if there's ever any questions regarding application submission or even the partnership training, I know sometimes writing outside of your resident state can cause some questions. We do have tools here at Premier along with the brand new partnership training guide, which I will be sending out to everybody just to make sure everyone is updated. If you are appointed with Mutual, you're going to want to double check and make sure that you have abided by their guidelines. So with that, I mean, really that's all, anything we can do on the app side, even the licensing and contracting, please feel free to reach out to me. We have 2 case managers that would be happy to take any questions along with a full licensing team. So you just can feel free to reach out to us. And if we don't know the answer, I am sure that Maria would be happy to help.
I certainly will. I certainly will. And I want to thank everyone here for the opportunity to allow Chris and I to speak about the Mutual of Omaha product. We enjoy partnering with Premier Marketing. So definitely, as Katie mentioned, if there's anything that you need assistance with, I'll be able to assist Katie or any producer. Chris, do you have anything else you further want to mention?
Yeah, absolutely. Just one little piece. I alluded to it earlier, and I didn't cover it when we were on the page around the producer guides, the kind of the product guide and the underwriting guide. On the last page of the underwriting guide, there is a listing of all the different contact numbers for Mutual of Omaha, and there is a email address, or is an email address where you can reach out to send in your pre-screen questions. We can pre-screen cases via email, and it also has a toll-free number in there where you can dial in directly to the underwriting team, where you'll speak with an underwriter during business hours, of course, and you can discuss your case. So you're a prospect, or perhaps if you had a question around a decision on a case that perhaps came in differently than you had expected, give us a holler. You can also submit an email or give us a call if you had a case that you'd like to have pre-screened that would previously declined by another carrier. Again, we want to do what we can to help you put business on the books so that we can pay the claims for your clients. And that's really what I got.
Thank you for
Sure.
mentioning that. I find that page very helpful. I use it a lot, and I always send that to when I get calls regarding contacts. So I'll have fax numbers, email addresses, mailing addresses, and like Chris said, the contact for our long-term care underwriting, plus a toll-free number for case management, long-term care case management. So that's a very helpful piece for you to remember. It's the last page on the underwriting guide. Katie, do you have any questions?
We have some questions that have been typed in. The first question is regarding the height weight chart. If
Mhm.
there is a if there is a change in weight, what is the stability period that you guys would go by?
Well, if we're talking about from one rating to another or from uninsurable to insurable, we do like to see that the individual's height and weight's been within that particular parameter or that area where they're looking to go for at least 12 consecutive months. Now, we try to be as flexible as possible. We realize that, somebody may not go to the doctor today and then exactly 12 months later go to the doctor again for a weigh-in. But, if it's a situation where they've been able to, I'm assuming that in most cases, we're talking about losing some weight. As long as we see something in medical records, I would say probably 6 to maybe 8 months out, we would probably be willing to waive the extra few months. We just want to ensure that we're not into a situation where somebody's lost a significant amount of weight and is in a position where they perhaps will yo-yo back up. Believe it or not, there is something called the yo-yo effect when it comes to height and weight. It's a real thing. It's not a made up sort of remark. And what we find in a lot of cases, if there's significant weight loss, if they're not able to manage those sorts of changes in their lifestyle that allowed for that weight loss, that oftentimes the weight will go right back up within a short period of time and oftentimes exceed where sort of that initial starting point. So we like to see that stability period in there.
Perfect. Another question is regarding diabetes. I actually have a couple questions typed in here.
Sure.
One would be, is type 1 or type 2 diabetes a total decline?
No. As a matter of fact, we take both. Of course, we need to ensure that the individual doesn't have any diabetic complications. We want to ensure that, on top of that, there is no neuropathy. We're not, regardless of what's causing the neuropathy, if there's neuropathy and diabetes, type 1 or 2, we will decline. If the individual is a non-smoker and doesn't have significant comorbid issues, such as like heart disease or heavy build, there is a possibility for a select rating for type 2 diabetes. If somebody has type 1 diabetes, or if they have type 2 diabetes treated with insulin, the best that we would offer would be class 1, which is that 25% rating.
Perfect. Another one is regarding family history. Is there anything else that you look besides dementia for family history?
No, at this juncture, I don't expect that guideline's going to change anytime soon, but we're not looking at anything else. I know that our California application does ask about some other conditions, but we do not ask. There are certain states that allow for us to sort of examine genetic testing. So Huntington's comes into mind there. If there's a family history of Huntington's, we probably would like to see the individual tested and those test results indicating that they aren't a carrier. But outside of that, where states do not allow for us to sort of require that, that's a different sort of situation though. But really just the family history of dementia, there is a direct correlation between a family history of dementia and cognitive claims down the road.
Perfect. Another one is regarding, and I'll take part of this. I have people asking if they're ready to sell this product. What we can do is, if you just want to send me a message, or you can even just type your name in here, Jim, I have your information. But what we would do is we would check your existing contract. And what I often do is I have your writing number. Maybe you write MedSups with Premier already, or disability or critical illness. What we can do then is give Maria a call, and she can tell if we have added the LTC line, and then we can verify that you are up to date on your training. So first and foremost would be to get the appointment, but in order to sign any applications or sell any long-term care, you would need to be certified in LTC. I'm trying to see here. A couple more questions we have is one,
Sure.
what is the length of time for your phone health interview?
The phone health interview, we tell people to set aside an hour. nowhere does it ever take that long unless you're talking about somebody that has a laundry list of medical history. Usually the phone history interview is done, I would say, right around half an hour, maybe even a little bit less, if there's no cognitive screen required. Really, the phone history interview itself, it runs about 30 questions, and a lot of them are just yes and no's. So I would say that probably half an hour or less, 95% of the time.
Wonderful. Another question is regarding your state product availability and also issue ages. So I don't know if
So
Maria.
that's a good question. So we offer our long-term care product in all states. Issue age. So we mentioned 30 through 79. In New York, the age maxes out at age 75. Was there another part of that question?
Nope, just the state availability.
Okay. I also, once you get appointed, and I don't know if Katie, if this is part of a PDF we sent you, but we do have a state special matrix that I want to mention. I use it a lot. It just tells you if there's certain features that are a little different in the particular state. So for example, in New York, it would have said maxes out at 75, or shared care is available only if you take a benefit period of 3 years or more, or Connecticut, for instance, Connecticut has the cash benefit not as a built-in rider, but as an optional rider. So there might be states that have a little differences in the product. And so our state special matrix that we have is available that you can keep on hand just to check that there's no difference in your state that you're looking at. So we'll make sure you get one of those as well.
Perfect. Well, I think we've covered, well, hold on, there's one more. With Janine, I do see your question. I'm actually going to reach out to you directly. The question is regarding going from different states and having multiple different licenses. So what I'm going to do, Maria, is share your partnership training guide, because I think that does the best job of kind of walking it through. So I will be in touch with Janine directly. And with that, go ahead. I'm sorry.
I would say we do have reciprocity. So if it is a question where they've taken their long-term care training in one state, some of those states we do accept reciprocity. So if you're, for example, did your training in Iowa, now you're writing in Missouri, it's a possibility that we could accept that training you did in Iowa. So I can help in checking with our contracting to see if with those type of questions that you'll end up getting, Katie.
Perfect. Perfect. With that, I want to thank you both for helping me out here today. This was great. I'm getting a lot of comments regarding the information on the webinar. People really appreciate our time. So with that, I want to thank everybody out there that dialed in, because we appreciate your time as well. We know that you guys are busy, and we really appreciate you guys just attending and asking some questions and maybe getting a better understanding with mutuals. So Maria, Chris,
Thank you so much.
Thank you.
Yeah, thanks for having us.
Thank you, Katie. Thank you for all those who attended.
And I will be in touch with the follow-up emails. And again, thank you all for attending, and we will talk soon.